sound check here. Wow, William, sounds good. Awesome. Thank you. You are ahead of me. We're going to get started in about 3 minutes or so. I just wanted to make sure that everything is all set up good. Looks like we are good to go. YouTube will probably kick in here in a second, and Facebook right behind that. So people are joining us from different venues from all over the world. Today's live trade setup events. We had some folks from France in the audience, which was awesome. So appreciate you being here today. Okay, I think the YouTube folks are officially clawed in here now, hooked into the event. Again, we're going to start 3 more minutes. We have some time. And we do this event, we've been doing this event on a regular basis, Thursday afternoons. And I'm excited to be here. So thanks for coming today. I'm going to put myself on mute for 60 seconds. Be right back. All right, I am back. Sorry for that little delay. Welcome, everybody. Thanks for coming today. Feel free to type in questions and answers in the question and answers box as you see it. I can see the YouTube questions and answers. I could see the Zoom questions and answers. I cannot see the Facebook questions and answers. So I'm going to ask my trusted colleague, Isabella, to cut and paste for me to see into the Zoom chat, and we will get started here today. Let's do one last sound check. Can everybody hear me okay? Give me a yes, a thumbs up, something else. I know we had one earlier from William. William's giving me a yes. Awesome. All right. Thanks for that. My name is Jim Cagnina, Senior Education and Training Specialist for the NinjaTrader platform. Today, event, Futures Trading 101 for new traders. Maybe you're not new. Maybe you're trading something else, or maybe you've traded a little bit of futures and you just like to come today, which is awesome. Appreciate you being here. Trevor, good seeing you. Daniela and Theo, thumbs up, big thumbs up. Appreciate that. I do want to remind everybody before we get started here, Trading futures options on futures involves substantial risk of loss, not suitable for all traders and investors. Oftentimes in futures trading, you have a high combination of leverage and volatility. And although that can be an equation for opportunity, also equation for risk. So be careful, only fund your futures trading account with risk capital. Everybody's unique in this world. I understand that and different. My personal definition, money I could afford to lose, doesn't change my lifestyle, doesn't lengthen my retirement horizon, doesn't overly cause stress in my life. These three things are important to me. And that's kind of how I personally define it. Easy on the day trade margins, and we'll talk in detail about what those are today. And actually, I have to get one more thing kind of ramped up here really fast. Now that I'm thinking about it. All right. So any questions on risk? Anything, just type those questions in. I'll grab them as we go. Appreciate everybody being here today. And we're gonna start from the start. Now, this is the NinjaTrader platform, and I'll go through this. It's not as complicated as it looks. If you're brand new to trading futures, don't freak out. It's not. It's really uncomplicated, actually, and I'll go ahead and explain all that as we go. But let's start from the start, right? You know, trading's been around forever, right? And you know, I use the analogy, not the analogy, but you go back in history. And you had this, you know, Greeks and Phoenician merchants, right, establishing trade routes and coming up with, you know, and trading goods back and forth through the Mediterranean hundreds of years ago. And then in 1571, arguably the first organized exchange was created in London in 1571 called the Royal Exchange. And then in Japan, let's go to the other part of the world, 1667. The creation of the Dojima Rice Exchange, right? And you might recognize the word doji from the Dojima Rice Exchange name. And this is, you know, literally, you know, the whole candlestick analysis that a lot of us use, and you see on my screen right now, started with these traders. And they were trading rice, right, which is a commodity. You know, rice is considered a commodity, an old-fashioned kind of definition. 1848, CBOT creates the first futures exchange based in Chicago Board of Trade. And then, I don't know, 22 years later, 1870, they developed the first octagonal futures trading pit. 1896, Chicago Butter and Egg Board was established, and that was the predecessor of the CME Group. And this, you know, Chicago Mercantile Exchange opened up in Chicago, turn of the century. And then fast forward a little bit of time, right? And then in the early 80s is when I started in this business, right? I was in the octagonal trading pit in the early 80s at the Chicago Board of Trade. Back then, there was no online trading, right? It's all done by telephone and by hand signals. And really looking back on it, it was like middle-aged type of operation. I mean, it was really a complicated setup, and retail traders weren't able to really participate a lot in it that much. So it was a tough thing. Literally, if you wanted to trade futures as a retail trader back then, you would have to set up an account with a brokerage firm that had an affiliation somehow, some way. And then once you did that, you'd fund your account with a lot more money than you have to fund now. And you would literally call your broker, and maybe your broker was on the floor of the Board of Trade. Maybe your broker was in another building. And then whoever that is would take your order, they'd write it down on a card, they would call, or if they were on the floor, they would give it to a clerk, a runner. That was me, right? They give me the order, I grab the order, and I'd run it into the pit to the broker, and the broker would then look at the order and then turn around and execute that order with somebody else in the pit. And then once the trade was done, the broker would write that down on a piece of paper, give it back to me. I'd bring it back to the phone clerk. The phone clerk then would call your broker, and then your broker would call you. Sometimes this process took, 20 seconds. Sometimes this process took several hours. Imagine being in a trade, not knowing your price for that long. It was really that crazy. But in any event, that's how it was set up in Chicago at the time. And that's how I started. Now let's fast forward to 1992, right? The first electronic futures trades were made on what's the Chicago Mercantile Exchange created the Globex electronic trading platform, which matches buys and sell orders, right? Instead of people now, we started in 1992 matching orders electronically, side by side with the pit, which was still going on. But then really what the big innovation was 1997. The CME group created this market called the E-mini S&P, the E-mini S&P, and we'll just kind of put that up on the screen right now. E-mini S&P is based on the S&P 500 stock index, widely followed stock index market, and that started it all. Now retail trading is accessible to some people, right? We could, if you have an internet connection and a brokerage account, you could log in and then you could trade. These were traded electronically side by side. Number one, they were a smaller size contract and orders were treated on a fair basis, right? First come, first serve type of basis. And so that was when the bell rang. That's when, online trading really started to take off. 2002, CME goes public. 2007, they merged with the Chicago Board of Trade. 2008, they acquired NYMEX. And so now all these asset classes are starting to pile on within the CME group complex. Now what's happened recently, May 6, 2019, write that date down, the micro E-mini S&P contract is launched, which is it was based on the E-mini S&P, but it's 1/10 the size of the regular contract. So now retail futures trading has become accessible to just about everybody, right? Just about everybody. Just to kind of give you an idea of the scope and size, let's see if we still have that cheat sheet up here. We don't anymore. But literally, the E-mini S&P stock index complex in September, as an example, and I don't know what the numbers are for October yet, traded almost $1 trillion in notional contracts. It's a huge market, and there's many different asset classes. We're going to go through all those in detail today, and that's short and long of it. That's the history right now. I have a bunch of questions in here about. Let's see. Michael is asking about. Okay, I'll get to these, Michael. You're a little bit ahead of me, so hang tight. Welcome from Venezuela. This is on the futures market, FTH, which in my humble opinion, hopefully I make my case, are better markets to trade than individual stocks or ETFs or options or that kind of thing. That's what I'm gonna try to make the case. All right. Let's take a look now. So I'm gonna use the trading platform a little bit as a way to tell the story here with respect to futures trading. And let's just kind of go around the board. Very top's a control panel and just gives me information on my my trading accounts. And I'm logged into a simulated live account, right? Not real money, simulated live account right now with a real-time data feed on the NinjaTrader platform. Hello from Singapore. Welcome. On the right-hand side is a trading ladder. And this is really where the rubber meets the road in futures trading. And we're going to focus on this in a minute. Next to it's my quote board called a market analyzer. And then you see a main chart here. All these windows are customizable and easy to manipulate and duplicate and move around. And many traders have a multi-monitor setup. Some don't. I have mine condensed here onto one monitor for presentation purposes, but totally customizable. Let's take a look at the trading ladder though, because this is what makes futures trading unique, right? I'm going to leave it here where it's at. And there's a price ladder in the middle, right? This is called the Superdome, depth of market. NinjaTrader Superdome, price ladder in the middle. And what these prices represent, and I have the E-mini S&P market up on the screen right now. And this is the price of the market right now. So if you see that yellow hashtag moving around here, this is where the last traded price happened, right? 67.50, 46.67.50. On the buy side, next to this price ladder, this is where you could place an order to buy a contract. These numbers here represent orders limit orders that have already been sent to the CME at various prices and are waiting at the CME order book. On the sell side, or on the right-hand side here, the offer or ask side, these are contracts already sent to the CME Group's electronic order matching to sell a contract, right? And so you can see this dynamic between buyers and sellers, and you can see it transparently right here on the screen. The distance between the highest bid and the lowest offer, that's the bid-ask spread, right? And you can see it's one increment. It's the smallest increment available to trade, which means it's a very tight liquid market. Each price goes up by one increment. It's called a tick. Each tick in this market is worth $12.50 per contract. There's 4 ticks to a point. And when you multiply 1250 times 4, you get $50. So each point here is worth $50. So it's 46.70 to 46.71 would be worth $50 per contract. If we bought 2 contracts, then it would be double that. It would be $100 for each point. And so the math is very multiplicative in futures, just depending on the size of your trade. And that's how you would read this. So the price ladder increments up tick by tick on the way up and tick by tick on the way down. Now, the thing that makes this really unique is this is the only E-mini S&P. This is the only S&P 500, E-mini S&P 500 market in the world. And everybody sees the transparency here. Everybody sees the same information. Everybody sees the same price. Everybody sees the same bids and asks. And electronic trading is so quick these days, and data is so wonderfully managed these days that a trader in Japan sees the same thing as a trader in Singapore, sees the same thing as a trader in Argentina or Venezuela, sees the same thing that I see here in Charlotte, North Carolina, or Chicago or Los Angeles. It's transparent. Everybody sees the same thing and has the ability to participate in a competitive way this against each other or with each other at the same time. And not only that, orders with respect that are sent to the CME Group, Globex futures markets, are treated on a first in, first out basis. So let me freeze the ladder right now and just kind of point out what that means. If you look at 46.68 as a price, you see a number 178 here in the bid column on the buy side. That's telling me that there's 178 contracts that are waiting at the CME Group in the book at the CME Group to be executed at that price. If I were to go ahead and try to buy a contract at that price, then my contract would be 179. So I would be in line behind 179 other ones. So that's called first in, first out, right? The sooner you're in, the closer you are to the front of the line, right? And then if the market comes down and starts trading here at 46.68, then you'll be able. Then as trades happen at that price, the contracts in front of you in line will start. The line will get shorter, right? They'll start getting filled at that price, and the line gets shorter, and your order's getting closer and closer to the front. And then if there's enough interest, then your order would be executed. Now, the cool thing about this also is this would be a limit order, which is saying, hey, I want to buy a contract at this price or better, which means it cannot trade below you. It cannot trade at 67.75 without giving you your fill, right? You're going to get yours before anybody below you gets something. And so that's how it works. FIFO works: first in, first out. Very fair, very very transparent basis. Is everybody with me so far? Yes, this is Morgan. This is Futures Trading 101. Thanks for being here. We're going to go over the indicators. There's a whole, this is feature-rich software, and there's a lot of indicators on here that we're going to talk about that are available to traders who use NinjaTrader. So hang tight on that. Promise we'll get to it. But I just kind of want to go over the basics of bid-ask spreads, limit orders. Let's go ahead and place a limit order, just kind of a random one. I'm going to go ahead and move my mouse to the actual Superdome, and I'm going to click at a price I'm interested in, and it would send an order to the exchange. As a limit order, we're in sim mode right now, but if this were a live account, then I would send an order to buy one at 46.68. And you could see it, the market's moving around. You can see it graphically represented on the chart here with this label that goes across. And that's where I've placed my order and I'm waiting. Now the market might just rally way above me and I don't get filled. That's very possible. Or I could get filled and then something could happen. But it's that easy to really actually place a trade. So let's kind of just hang tight, see what happens here for a second, and watch it in action, because what you're seeing is trades. There we go. So we actually bought a contract right now in the sim account, and it's green, right? So you'll see green means buy, which we would say we're long a contract, right? Buy is long. If we sold a contract instead, then we would be short a contract. So green is buy. That's one. That the number one is in there right now. In my unrealized P&L is moving around in real time, right? It's moving around in real time because the market's moving around in real time. Now, at a certain point, I might say, okay, I would like to put a profit target. I'd like to, hopefully the market, my opinion is the market's going to go appreciate in price. I would like to I'd like to sell my contract for profit higher. And so I'd go to the sell side of the ladder and I would just click again. Now that's a limit order to sell a contract. And I'm just going to be patient and wait. And that's kind of two of the three legs of a regular trade, right? We have a position and then we have a profit target. Now, the other thing I want to do, of course, is, well, I would like to place a stop loss just in case my opinion is wrong. I don't want to, lose too much money. So I want to kind of put a stop loss in. And I'm just putting random orders in, guys. So don't kind of copy me, just thinking that there's strategy here, because there's not. So I'm just going to go ahead and use the ladder again. And I'm going to use the mouse, the middle mouse key or the roller, and we're going to place a stop loss, right? So this is the anatomy of every trade pretty much in the world, right? You have a position, you have a profit target, you have a stop loss. It doesn't matter what you're trading, right? What market you're trading. And this is kind of the anatomy of how it is, right? And the yellow, remember, yellow is where the market's trading at any given second. And then the gray or brown, depending on your monitor, shows you where your position is from. So right now we're losing money right now on the trade. And you can see our unrealized P&L up here in the control panel moves around as the market moves around. Now we're minus $75, minus $62.50. And remember, each point is worth $50. Each tick is worth $12.50. I just have one contract on. Other point of interest here is at the control panel, you see intraday margin. Now in futures trading, you're able to trade with a thing called intraday margin or day trade margin, right? Now, keep in mind, day trade margins, when you're trading on margins, they magnify gains as well as magnifying losses, right? So they act as a double-edged sword. So you need to be careful with that. But the unique thing about day trade margins is it assumes that you're going to liquidate your position before the end of the session, right? Before the end of the day. And in my particular example, I have a $5,000 cash value in my account. I have one E-mini S&P contract on, right, and it's a $500 day trade requirement, and then my excess intraday margin is 4,500, right, and that moves around a little bit as your P&L moves around because it calculates your unrealized P&L in that excess intraday margin field. Moving on over, you see initial margin, and you might say, well, what is that, Jim? Why is initial margin different than intraday margin? Remember, intraday margin is assuming you're going to liquidate your position before the end of the day. Initial margin is set by the exchange, and what that's assuming is you're going to carry your position overnight or longer, maybe 2 days, maybe a week, who knows? But you're going to carry it overnight, and this is what the exchange would charge you, right? They would charge you $12,650. They wouldn't charge it to you, but you'd have to have that much in your account, right? You would have to have that much in your account. And since I only have $5,000 in my account, if I move over here, you're going to see I have excess initial margin is negative, right? I don't have to worry about that now, but what this is telling me is I cannot carry a position overnight. I don't have enough margin money to do that. So that's giving me that piece of information as well, right? And so that's kind of how you read it. Initial margin, carrying positions over, intraday for just day trading in the middle of the day. And we might have a couple of questions on those. Let me see. Majors Marketing says, when trading different positions, how does NinjaTrader know what buy goes with what sell? It doesn't matter. So unlike equity trades or over-the-counter Forex trades where you have to match up position, buys and sells, here the math is fluid. So right now I'm long one. If I sell a contract, well, then I'm going to be flat, right? I won't have a +1 position anymore. I'll have no position, right? If I buy a second contract right now, and let's go ahead and do that. I'm just going to go ahead and pick another number here and see if we could buy a second one. If this order gets filled at 66, I would be +2, right? I would be +2. I'd be long 2. And then if I sold a contract up here, I would be, then only be +1 again, because this would be, consider this a -1, right? So now let me just kind of move this down a little bit so we don't get stopped out. Okay, so now I have two contracts on, and I want to change my stop to a 2. And I have a one contract profit target up here. And let's go ahead and put another contract profit target up there as well. Okay, so now I've got a 2 position on 2 contracts or 2 lots. We call a contract a lot. If in the old days we called them cars, back in the, don't ask me why. If I get stopped out here, my position is 0, right? So the math is going to be my 2 entry prices for each of my single entry contracts, and then it's we're going to subtract that against the math, my 2 contract stop loss prices, right? So it doesn't matter here. The math is going to work out no matter which trades that you match up, because you're going to be, we're day trading right now, we're going to be flat at the end of the day. John, every broker is different on that, John. So it depends on who your broker is. But, and remember, NinjaTrader platforms is a multi-broker platform. But it's typically 3:45. We want to be out of margin positions, and I'm talking Chicago time, because at 4 o'clock the market closes. Which brings me to my next point: is the session here is 23 hours long. Let's focus on Chicago time. So Sunday we open up at 5 o'clock at night, go all night, all day until 4 o'clock in the afternoon. That's a 23-hour session. That's one session, right? And then there's an hour break, which is considered as odd as it sounds overnight, and that's where this initial margin comes in. Well, we just got stopped out, right? So our realized P&L is here right now, because it was unrealized. Once we're filled, then it moves over here. So Monday night, then at 5 o'clock, after the hour that Globex is closed, then it goes 23 hours again. Until Tuesday, and then there's an hour break, and it goes 23 hours again Wednesday. The cycle repeats all the way till Friday afternoon. Then we're done until Sunday. So take Saturday off, go enjoy yourself, relax, do whatever you do. There's nothing to do on Saturday. And then Sunday night again, it kicks back in. And, so different brokerage firms will treat day trade margin. I would check with your broker on that. They would treat day trade margins differently. Maybe the intraday margins in the night session, some might double them, right, to 1,000 instead of 500 for an E-mini S&P as an example, and some may not. It just depends on the market, and it depends on your individual provider. So the contract price, Brandon, is that yellow flag right there, right? Or you could take a look at the quote board here. And let's take a look at the quote board, by the way. So the very first one is the market we're looking at, the E-mini S&P, right? And I have the last price up there. So it's moving around like any other quote board. And this is highly customizable. You could change the colors. You could add columns. You could do all sorts of different things with the market analyzer. But this is how I have mine laid out. And then the next column is the daily volume. And then the next column is called net change, and that's net change from the previous close, right? So the ES right now, if you're used to trading SPYs, it's similar kind of market based on the S&P 500. The net change is 11 from yesterday. The next one down is the NASDAQ 100, which is the other pretty popular stock index future. Underneath it is the Russell 2000, and then the Dow Jones is YM. I know it's kind of a why isn't it DJ, but the ticker, the symbol is YM, and then FDAX is actually a European stock index future based out of Frankfurt. It's a very popular, very good market. So these are the stock index futures up here, at the top part of my quote board. The second category I have is called the micro stock index. It's the same markets, the same four markets, only the smaller size little brother contract. So it's the micro E-mini S&P, the micro NASDAQ 100, the micro Dow, and the micro Russell. And this allows for smaller size accounts. As an example, the margins are 1/10 the size. So a day trade margin for a MES market would be, and let's go ahead and do that. I'm going to just shoot over here again, and then we'll just, I'm just going to click this market button here. I want to buy a contract at the market. And oops, what did I do wrong? I did something. Oh, I didn't link. I'm sorry. I made a mistake. Let me just close this up. Let me change. I do not have my sync on. Let's sync it. Let us sync it. And we did. All right. So let's do it again. I'm going to go ahead and buy one at the market. And you can see my intraday margin now is only $50, right? Instead of, Moshe, I will get to the charts. Hang tight. $50 instead of $500, because this is 1/10 the size smaller of this particular market, right? Which means everything is 1/10 the size smaller. The tick size, as an example, is only $1.25 instead of $12.50. And that might be more in line with how much risk capital maybe you would like to fund with your account. So, and not only that, you could scale in and scale out, cost average dollar in, cost average dollar out, a little bit easier relative to on a risk relative basis to the bigger size contracts. Okay, Danielle, how long could you hold a contract? Well, in this particular case, I could hold this contract for a long period of time. I mean, I've met my initial margin requirement, which is now, instead of $12,065, it's $1,265. It's 1/10 the size. Remember this, the micros are 1/10 the size. My excess initial margin is plenty, right? 3,396. And I could keep this for, as long as I want until the contract expires. And not only that, when the contract expires, remember this is an E-mini S&P, it's a micro E-mini S&P. The ticker symbol is December, that's that 12. And then 2021, that's the year. And it's going to expire, but it's going to be replaced with the next contract month, which is going into 2022, which is March. So it's a quarterly expiration. And then even toward the expiration of this particular contract, right, 3 months, then you could just roll your position over, sell this contract, buy another one in the next front month, and you basically have a continuous position. And this is important because you don't have that in as an example, if you're trading stock options. There's the clock will run out at a certain point, right? And then you start having time decay and all sorts of other problems with your stock option. Here, you could keep rolling your position and maintain a long position in the S&P for really as long as you want. It's really as long as you meet that, this initial margin requirement, which in my example we do. Does that make sense? On that, yes, no. Okay. Okay, so here's another great question. Does MES, the micro E-mini S&P, behave like the ES? Exactly. Well, yes. But when you say exactly, well, there could be a momentary, like let's just hold the two trading ladders up side by side. Oh, I have them linked. Sorry. I gotta unlink them. Not bad. Let's go back here and get that MES market in there. MES. Let's take a look at them side by side. So here are these domes side by side, and trading ladders, depth of market, however you want to refer to it. And you can see that they're highly correlated, nearly 100% correlated. and they're moving quickly. There's arbitrage traders that are keeping these two markets in line with each other. You can see the bids and offers on both markets. I have the classic E-mini S&P on the left. I have the micro on the right. They're in sync. They're in sync. The basis is the same. The underlying is the same. Everything's the same. It's just 1/10 the size, but they are considered different markets, different margining, 1/10 less, and they're separated that way. But since they have the same basis, the pricing is going to be pretty much the same. So in any event, that's a good way to look at not only that, but also liquidity. Let's take a look at when we talk about liquidity, we want to trade markets that are liquid, right? We want to trade markets that are liquid. And let's get an example. I got a spreadsheet. Don't worry, it's the only spreadsheet I have. We're going to show it to you. Let's do it. Let's look at a trade. Let's look at some trading examples. I have a winning trade example. I have a losing trade example for the classic E-mini, the E-mini S&P. I have a micro E-mini winning example and a micro E-mini losing example. Let's start with the E-mini S&P. So we have one contract. If we were to buy a contract at 41.20 and then sell it at 41.24, we would have made 4 points. And remember, each point is worth $50, right? Each point's worth $50. And so our gross profit would have been $200, right? And for that transaction, we would have had to temporarily allocate $500 in our account for day trade margin. Now, the notional value of that contract, how much it's worth, you take a multiplier, which is 50, which happens to be the point size, times the price. So 50 times 41.20 gives us $206,000 of notional value. That's a lot of leverage. That's a lot of buying power. Keep that in mind. The other side of that is, it's an efficient use of your capital, right? You wouldn't have to fund with $206,000, obviously. Maybe you're funding with $5,000, right? So that's how you can kind of look at the leverage that you're getting. Another way to look at the leverage that you're getting. Let's double it up. Let's say we bought two contracts, same price for the sell, 4 points. Our gross profit's double. It's 400. Day trade margin we used is double. And then the notional value is double. When it's multiplicative math, it's really, really straightforward. If we went up to 5 contracts and you bought at 20, sold at 24, 4 points again, profit gross is 1,000, and day trade margin that we would have used for that is 2,500, and notional value over $1 million. Now let's focus on that $2,500 for a minute. So if you fund your account with 3,000 and you're using $2,500 of day trade margin availability, then I would suggest to you that that's overly aggressive and probably shouldn't do that. So just keep that in mind when I say, hey, be ginger on the day trade margins. That's all. That's the exact same trade, but opposite. Let's say we bought at 41.20, but the market went against us 4 points to 41.16. We lose 4 points. Our P&L is minus 200. Our day trade margin is the same. It doesn't matter if you go long or go short in future trading. And then notional is the same. So all this math works out the same. We double it up. We lose 400. Day trade margin is the same, notional value the same. We have 5 contracts on, we lose 1,000. And remember, in that $3,000 account size, losing $1,000 is huge. That's not that great. So again, be careful with that. Let's do the exact same trade though with the micros, right? The micros. We buy a contract, 4-point winner. Instead of $200 gross profit, it's $20. Margin. We used, instead of $500, we only used $50. And then the notional value is still pretty impressive. It's $20,600. Now we're trading even higher than that. So the notional value is going to be a lot bigger today as we speak. But when I made this slide, this is where we were at. And double everything up. It's a $40 P&L, $100 day trade margin, 41,200 notional. And then go by, do a five lot or 5 contracts. It's $100, 250 margin, and then 103,000. Losing trade is the exact opposite, right? We'd be losing $20, $40, or $100, depending on the size of our contract. And then math will work. You could do this math with any size contracts that you're interested in. Okay. It's kind of, any questions on that, let me know on that spreadsheet. But that's in a nutshell how straightforward the math is in these particular markets. Okay, going back to my quote board though, we're not done with that yet. We're not done with that yet. Currencies is my next area, right? So currencies or currency futures or Forex futures, whatever you want to, however you want to refer to them as. All the major currency pairs are available. I have a few of them up there. I have the Aussie dollar. They all start with a 6, right? That means it's a currency, but Aussie dollar, British pound, Canadian dollar, Euro FX, Japanese yen. And Japanese yen is a true cross. It's not reversed. So it's the yen versus the US dollar. And over the counter spot Forex, it's the opposite. They reverse it. US dollar over the yen, but not here. It's yen over US dollar, peso, New Zealand, Swiss franc. So these are kind of the majors, and there's also non-majors available also on this. Again, you get all the same benefits. Transparent marketplace. You see all the bids and offers. All traders across the globe see the same pricing, and it's a big advantage. If you open up 4 different over-the-counter Forex accounts and you place the same trade, you're likely to get 4 different prices, right? You're likely to get 4 different prices because the over-the-counter folks make up their own price, right? Maybe they use an EBS feed, which is a good thing, but then they have to offer you a bid and offer, right? The bid and ask, right? And they have to create the algorithm and the method to do that. And so you're trading with basically a broker instead of a regulated exchange. And in the CME Group, as an example, is a highly regulated exchange, right? Publicly traded company. It's regulated by the CFTC. There is a clearing corporation that is in place for counterparty risk, and there's all sorts of controls and safeguards here in these markets, which are, in my opinion, stronger than in the over-counter markets and some of the other markets that might not be regulated as strongly. In any event, disaster could strike anywhere, of course, but that's kind of my opinion on how it is. All right, so currencies we talked about. And there's micro currencies, also smaller size contracts. Energy markets are very popular. We have crude oil here. It's probably one of the most popular energy markets that are traded. This is the CL contract, which is the West Texas Intermediary light sweet crude. It's more popular than the sour crude because of its chemical composition and the ability to make gasoline easier. This is a standardized contract that's delivered at Cushing, Oklahoma. Very popular to trade. There's a micro version of that contract, which has already done 113,000 contracts. It's a pretty good day. Natural gas is another one, unleaded gasoline. And there's other energy markets also that are available on the futures contracts. Metals, both precious metals as well as industrial metals. We got gold, silver, copper, platinum. All those kind of markets are pretty popular and available also to trade on the futures as a futures contract. The Treasury markets, you can trade the entire yield curve, right? Yield curve has been big in the news these days, with all the stuff that the Fed was talking about yesterday, and keeping the Fed funds target rate unchanged, and starting to taper on QE, 15 plus billion a month, and keeping an eye on inflation and all that stuff. So you see the yield curve in play a lot these days, especially with respect to what's going on with the Federal Reserve Board. And so you have the whole yield curve represented. You have a true 30-year bond, which is an ultra bond. Here's a picture of the ultra bond. You have the regular 30-year Treasury bond, which is where I started my career at, and so they did 321,000 contracts today. It's pretty good. 10-year notes, There's a 5-year note, there's a 2-year note, 3-year note, there's a 2-year note, there's the Fed funds itself that's traded on the futures markets. So depending on, how, if you want to get involved with different areas of different yields and different treasuries, these are really good liquid markets. I mean, look at the 10-year note, 1,287,000 contract traded. This is by far the biggest, most liquid market that there is here. So anyway, in any event, it's another asset class. So now we're into this realm of, we're no longer talking about commodities anymore, right? Chicago Board of Trade started up and you're trading wheat, corn, oats, soybean oil, soybean meal. Well, they're still available here. It's at the bottom of my quote board here. All those are grain markets that I just mentioned. But now you have all the universe of all of these asset classes, which really makes futures trading attractive to anybody who wants to express opinion or trade any different asset class. Micro Bitcoin, kind of new. Did 14,700 today. We'll see how it goes. But one of the things that have really pumped me up on the Bitcoin futures is now there's cash entities. There's ETFs as an example. ProShares ETF, Bitcoin is they invest in CME Group futures, Bitcoin futures. So it's really the nucleus of the markets are these futures markets, and that's why I think it's another great reason to consider trading them. Okay, so we talked about asset classes. We talked about margining. We talked about a trading ladder. Now let's talk about the technical analysis aspect of it here. And let's just go back to my ES chart. And NinjaTrader is awesome because you literally just right click on something and you could do something. So let's do that. Here's my chart the way I have it set up right now. I'm just going to right click and then I'm going to click on my indicators. In the menu, there's one of the options is indicators. I'm going to click on that and it's going to open up a new dialog box, right? And in the upper left, it's going to give me all of the indicators that are available. Just about every one of these is customizable once you decide to use one. And all the usual suspects are on here and then some, right? And this is, in my opinion, one of the reasons why this is an award-winning trading platform, right? You have this flexibility to do whatever type of technical analysis that you're interested in. And then, there's once you pick whatever you're interested in, then you could configure them, right? You can configure them so however you want. As an example, I have CCI oscillator here. That's that, it's a gold line down there. And I highlight it, and then I could customize it. I customize the colors. I could customize the period, and then the overbought and oversold levels I could change. And so that's kind of the real flexible part of the software. The simple moving average I have here, and this is how I develop my moving average cross at the bottom. I have a 26-period moving average and I have a 6-period moving average. They're both color coded, so I could kind of get my head around what's going on. Order flow volume profile. This is these histogram bars behind here, and this is another huge thing that's really unique to futures trading, right? And what these histogram bars are doing is they're just tracking the volume throughout the entire session at every given price or every price increment in this horizontal histogram fashion, right? And it shows us areas where volume is more than other areas, right? And it shows us the standard deviation of where volume is traded in the course of the session. And it shows us the point of control where more volume is traded at this particular price level than anywhere else. Some people would say this is price happiness, and markets tend to gravitate toward price happiness. Not always, but oftentimes it does. So this type of volume tool traders could use to develop points of interest. In an equity trade, you're trading with it. How many times have you tried to place a stock trade, and you're literally like, all right, where do you want your order routed to? Well, all right, so you're sending your orders to different places, and some brokers then will take that order and sell it to somebody else, and that's been in the news a lot, or it'll go to a different ECN or some other place. And here, that's not the case. So you can't really see all the volume in those other types of trading venues, especially options, and even Forex, over-the-counter Forex, that you can in futures trading. This is all the participants, whether they're institutional traders, whether they're hedge funds, whether they're commercial hedgers, whether they're individual speculators or money managers. Everyone's trading here, and we can see the volume. There's no hidden volume here. Once the trade is made, it's here. So that's another real positive approach on this transparency idea that we get in the futures trading markets. Again, indicators, however you want to do it, software, you right click, you could duplicate a window if I want. And then, maybe I want to change, I want to change it to a different time frame. And instead of a 10-minute chart, I want to do a 30-minute chart and put them side by side and do that kind of analysis. So those kind of things are just so intuitive and so easy with respect to the software that it really, I think, is a huge advantage for traders. Same thing with the trading ladder, right click, copy, you duplicate. You saw before how I had synced everything to my quote board, right? So if I want to take a look at a different market, let's say I want to do the Euro FX, I click on my quote board, the DOM changes and the chart changes all at the same time. If I want to link them together, you don't have to link them together. You can link them together. It's really, really that easy. And the software and the data is that advanced. Mark asks if I can comment on my settings for order flow. Yeah, I sure can. For order flow volume profile, let's just pick a market. Let's pick an ES market as an example. The first thing you want to look at is what's the range. If you have a big range, then you might want to adjust the size, the height of your histogram bars. But let me just show you how I have mine set up. I'm going to go to my indicators again. Thank you for this question. I'm going to select order flow volume profile. And on the right-hand side, it shows my properties, right? And so I'm going to calculate it on each tick. I like to have that on there so I don't have to wait for a new bar to get my data. The data is continually flowing, right? I have ticks per level set at 2. And that way I can see the numbers, the volume numbers in the actual histogram bar itself. Value area is, I'm going to keep that the same. That's that dark blue area there. And that's 1 standard deviation, basically. So 68 is right? Some software default to 70, but 68 is closer to 1 standard deviation. All of this other stuff is visual, however you want to visualize it. There's, you can get really crazy on the colors, so be careful with that. Lines, extension lines, point of control extension lines, you could edit. I just have it all default factory setting. The one thing I did add was at the very bottom, who asked that question? Michael? Was it Michael? Is show value labels. I have that there. So show volume labels. I'm sorry. It'll put the numbers in the bars themselves. And let's kind of zoom in on that to see what that looks like. Just to kind of really make the point. So you can see, on these 2 ticks, 20,516 contracts traded. The next one down, 24,380 traded. If we go down to 60, where are we trading at now? 64. You can see the numbers are moving around here. The volume is accumulating in these histogram bars, and these histogram bars will get bigger as the day goes on. With 14,600 of them in that particular bar, when you start adding them up, you can't really see. There you go. You see a little adjustment happening. And then the point of control could change, right? The point of control is simply the prices where the most volume traded. So right now, 27,363. Let's say, market rallies up to, 68 even, and we traded, 4,000 contracts, then this would be the new point of control, right? It would be the most contracts, that's all. But it gives us an area of interest to decide how to go ahead and look for areas of interest. So Mark, hopefully that helps. Hopefully that helps. Mark says, Michael says, how do I get my markings applied to all time and tick charts, horizontal lines, drawing tools won't do that. Drawing tools, if you're using a drawing tool, it's unique to the chart. Otherwise, you're just going to link it the way I did with this, the first area instrument link, pick a color, and then you just link the quote board and if you want, the DOM to those as well. So when you just toggle back and forth, all of your all of your settings are just memorized and the new chart pops up. Any event, all right, so we covered a lot of ground today and we're getting close on the hour mark. I'm going to look at my notes real fast just to make sure I didn't miss anything. We covered kind of day trading, position trading, did a trade example. I think we covered, hey, look who's here. Kimasabi, welcome. Good to see you again. Thanks for being here. Yeah, so we covered, we've kind of gone through any questions I missed, type them in. Duplicating a chart clearance is easy. I'm just going to go to my, see the bar up here at the top of the chart? I'm going to right click my mouse and I'm going to click duplicate window. And that works on any window. And it's simple as that. Right click, duplicate. Same with the DOM. Right click, duplicate. Market Analyzer, right click, duplicate. I don't even know if it will do it here. No, it won't do it for the control panel. The control panel also, let me just kind of show you a couple things. Your open orders, are, would be listed here. Or I'm sorry, all your orders are listed here. Executions, in other words, the trades that you made on the day are listed here. We don't have any strategies running the positions. We still got that one contract long position here. And then I have 2 different SIM accounts, and then here are my log files. In case something weird happens, we could analyze those. The other thing that's really slick here is the ability to reach out to support if you have a question on something. You hit the help button, and then literally you could email support, and it opens up this ticket. You could attach an image if you want to take a screenshot, or just tell them what, type in a question here. And then platform support will then very quickly get back to you with an answer. They're very, very awesome platform support folks, and they're very quick. So let's see. Bertaza says, I apologize if I said your name wrong. I have a question on account inactivity. As a beginner, I am sim trading. So how many trades do I need to live trade to not get charged? So if there's, NinjaTrader is a multi-brokerage platform. So reach out to your, for that specific type of account question, reach out to your customer service rep. But I do want to talk about the pathway though, which for new traders, maybe you've never traded a futures contract before, maybe you've never traded anything before. A good pathway is to try a free real-time demo account for 14 days. And during those 14 days, learn the mechanics of how the software works. Learn how, set up your charts, set up your workstations the way that most suits your trading style, and then spend some time sim trading and kind of getting a feel for the mechanics of how the markets move. That's kind of number 1. Number 2, brand new, fund your account with a little, a smaller amount of risk capital maybe, and then trade the micro contracts, the smaller size contracts, right? In that way, you kind of ameliorate risk a little bit because you're not relative to trading the big ones out of the box, and you'll get a feeling for what it's like to trade real money. Because when you trade real money, there's chemical reactions that happen in your brain, flight or fight, dopamine, serotonin, all of these things happen, and you can't control it. It's part of your physiology. So once you kind of get that feeling going, and you're trading real money, you add to your muscle memory, and then if futures trading is right for you, maybe you graduate to the classic size contracts with the bigger size account. Okay, so Morgan says his POC is different than mine from a volume point of view. Just make sure, Morgan, it should be the same. If you just make sure your tick per level is set the same. Mine's set at 2. And then make sure that there's going to be a difference between the MES and the ES. So make sure we're comparing apples to apples, but ES to ES, and if you have a 2-tick chart there, it should be all in sync. Oh, thank you, Terrence, for that. Appreciate that. Appreciate that lifeline. So on the NinjaTrader website, on the NinjaTrader YouTube channel, there's archives on a lot of the events that the whole team does, and there's a lot of really good folks doing these presentations side by side with me. I think we got most of the questions covered here. Let's just double check. While I'm double checking and scrolling back up, I do want to remind everybody that trading futures, options, and futures involves substantial risk of loss, not suitable for all traders and investors. Oftentimes in futures trading, you have a high combination of leverage and volatility, and although that could be an equation for opportunity, it's also an equation for risk. So be careful. Risk capital only. Fund your account, smartly, and be ginger on the day trade margins. I'm just kind of scrolling down the old questions I might have missed. I don't like to hear that. Mackerson, I'm going to invite you to my Tuesday and Wednesday S&P live trade setups, because your comment was you took a massive gamble trading the open, and when I think of massive gamble, I think of waste of money. So what we try to do is we kind of walk through deliberate strategies, rule-based strategies, based on the information that the candle's telling us and based on the rest of the indicators that you see on my chart. Let's see. So this is another great question. Murtaza asks, how do we ensure that we are trading the right contract with the right contract expiration month? NinjaTrader software will remind you. NinjaTrader software reminds you when you log in, it'll pop up a window if it's time to roll over a contract and say, hey, it's time to roll over the contract. Is this okay with you? And you say, okay. And then it does it automatically for you. And then also all of your options here are automatically kind of rolled over for you as well. So you'll always see that front month pretty much. It would be hard to miss with the NinjaTrader software. Let's see. Someone retracted their message. I didn't know you could retract a message. Let's see. I think I got everything else on here, unless there's more at the bottom. Okay, so Isabella, if you could get them the platform training link, cut and paste in there, that would be awesome. Because someone's asking, how do I join the Tuesday and Thursday session? YouTubers, hang tight. We'll get that link cut and paste. My colleague Isabella is on the job. There you go. So it should be in the chat box now for everybody to see. That's kind of the schedule. Next week's schedule might look a little different, but Tuesdays and Thursdays, Tuesday, Wednesday, Thursdays are all 9 o'clock Central, 10 o'clock East Coast time. And we have a lot of fun, and they're free. And the nice thing about it is we've developed a community of like-minded folks that are also providing opinions and feedback and interaction. Some of them are very experienced, some of them are brand new. Totally flexible. You can come if you want. If you have to leave early, you have to leave early. If you get there late, you get there late. But it's a lot of fun, and I recommend everybody check it out. Okay, so I had to roll over contract manually. Another tip is look at the volume, right? So right now, ES today it's kind of a low volume day today, relatively speaking. Maybe we'll hit 1 million, maybe we won't. It's 12 o'clock Central Time. We got a few more hours, but we're only at 702,000, but it's still a big number, right? So when you can see the relative volume sizes in front months are way smaller right now. And so you'll know you want to trade the contract that has the most volume. That's kind of the second tip, second trick. Okay, so let me just scroll down. I have two chat boxes going on here, one for Zoom and one for YouTube. Let me just kind of make sure I got everything here. Yeah, the fib extensions, Morgan, let's save that for Tuesday. Let's save that for Tuesday. We'll be getting a little bit into the weeds there on that, but we'll table that for now. All right, I think we're good. So thanks for coming, everybody. Appreciate your time today. I appreciate you being here today. Hopefully we'll see you next week at some of the events. Have a great weekend. Tell your friends or anybody who's interested in trading to come in and take a peek. We'd love to have them. And then I just want to leave you with, be safe out there and be good to each other. Take care.